Mustapha Wahab, an equity research analyst at Cordros Securities, joins me now to review today's trading activities in Nigeria's equities markets. Thank you so much, Mustapha, for joining us today. I've got to begin by getting your thoughts about where you think the market is at the moment. Because when we take a look at the volumes, the likes of GT Bank and Zenith Bank over the last 2 days, we have seen increased interest in those two stocks. And of course, if you take a look at many of the blue chip companies, some of them are trading at their 52-week lows. So it does suggest that there could be one interest, local interest, if not foreign interest. And then beyond that, there is also the conversation around dividend yields. Your perspective on the attractiveness of the market right now?
I mean, from where we stand right now, it isn't so much as about, valuation anymore. I mean, I think attractive valuation story has actually been at the core of discussion of many, analysts and market participants, I mean, over the past few months. I think especially, since January 2018. And since then, market has actually been beaten badly to the point wherein you have no choice.
But at some point, you've got to see that rebound,
exactly,
right?
Exactly,
so
exactly.
What I'm trying to get your view on is whether or not we are close to that point, if not at that point already.
I don't believe so. The reason is because, our views in-house on equities market going forward is actually very clear. Until we start to see some, market-friendly reforms and policy implementation by the federal government, that's when we start to see, some activities in the market. From where we are right now, market is very cheap. Clearly, compare Nigeria's PE, to comparable countries as well as its historical levels. What you see is that market is, very, very cheap, and which should have, ordinarily driven, investors' activities in the market. But because of the fact that those policies, that market would like to see, they've not been put in place just yet. That's why
I hear you when you make the point about the fact that it's been cheap for well over a year.
Yes.
But there's also discussion around dividend yields now. Even if you are a fixed income player, if you are invested over the long term in Nigeria, dividend yield is something that you pay attention to as well. So don't you think that that could be a story that could perhaps turn the market a bit?
Obviously, I think that's one of the key reasons why you see some players actually taking some quite a number of stocks right now. For instance, a Zenith Bank at 16 naira levels compared to 52-week high of close to 25 naira per share. It's actually, dividend yield is actually now sitting at 17% level. So it does make sense. Double digit. It does make sense for you, to look at that stock at that attractive entry price and then, enjoy some 17% levels. Yield. Also a Danksem that is as conservative as there is. Danksem dividend yield is now close to 10% level. So it makes sense for some players to actually take up those stocks at that pricing.
Right, but you still don't see the appetite because of one, as you've mentioned, policy moves from the federal government.
Exactly.
But beyond that, there's also the potential continued sell-off by foreign investors, given what's happening in global markets and, of course, the outlook for the global economy.
Clearly, right, global environment right now is actually not very supportive of risk assets. That's perhaps one of the key reasons why you see investors, despite the recent sell-off, actually playing more in the fixed income space rather than in equities. In fact, the last time we checked, our total offshore holding of foreign investors now sit at around 27 billion. That's up from 26 billion in the previous month in July, right? And most of the increases were actually from the fixed income instrument rather than equities. Equities has fallen to about 4.5 billion. That's from the high of 11 billion in February, 2019. It basically shows that, these guys are no longer interested in, taking up risk asset in Nigeria. They would rather perhaps stay with fixed income, instruments.
In fact, what we're hearing from the points made by my last guest is that they're actually now looking to sell those fixed income assets. So
exactly.
It's quite an interesting season right now.
Exactly. Terrible. Yeah.
Okay, but all that said, though, so what do we do with equities? Do we just simply pile the cash into fixed income for now? Is there any case you can make for investing in equities right now?
Where we see, a rebound, or where investors would like to see the bottom of the market is perhaps maybe towards November. The good thing is that 2019 budget has been approved, ministers have been nominated, portfolios are expected to be allocated in the next few weeks. So possibilities are that we'll start to see some market-friendly policies, like I said earlier, right, which could perhaps rejig the market market from the lows of the past few months, right? And secondly, is that there are a lot of low-hanging fruits that the FGN could do. I mean, that could spark activities in the market. I mean, if you take away fuel subsidy, for instance, in 2018, fuel subsidy got roughly $3.5 billion. I mean, if I put that number in proper perspective, FGN actually raised $3 billion in the Eurobond market at 9%. So if you say that Nigeria's government is actually borrowing to finance subsidy, it's actually not out of space. Do we have enough room to continue to rack up borrowing? I guess not. I mean, the last time we checked, debt service to revenue ratio is now 63%. It means that for every dollar FGN raised in terms of revenues.
I think you're making an interesting point. Are you concerned that the federal government could be starved for? They could have a serious budget problem moving forward.
Definitely, definitely.
Do you think that is inevitable, given all that has happened with borrowing and potentially where they can get more revenue?
No, I don't think they have enough room to rack up borrowing. That's the problem, and they are currently facing significant, fiscal pressure. So what I would expect them to do, I mean, over the next few months, is for them to effectively take off borrowings. In fact, I was reading this morning wherein IMF and World Bank were actually advising Nigeria's government to take away fuel subsidy, stating that, I mean, it could perhaps add some 4% to Nigeria's GDP. So it makes sense. I mean, it's a low-hanging fruit. I mean, if you can take that away, investors would like that, and perhaps they would start playing in the equity space again.
Thank you so much, Mustapha, for your insight.